Hi, everyone. I'm Rafia Hassan, Chief Investment Officer of Wipfli Financial Advisors. I wanted to take a few minutes today to talk about some highlights on market performance in the second quarter. The second quarter of 2020 saw the continuation of a new normal as COVID-19 continued to disrupt everyday lives. It's amazing to me how quickly human beings can adapt. It's hard for me to believe personally, given where we are at today, that as recently as February, I used to go into the office every day and have meetings in person. What's also amazing was how strongly markets rebounded in the second quarter after the sharp downturn that we experienced in the first quarter. The global stock market was down over 30% on March 23rd of 2020, and it gained 11% in April and then finished the second quarter up by 20%. Two of the main factors that have been cited as contributing to increased market optimism were first, significant fiscal and monetary response, both from governments and central banks, and secondly was the reopening of economies from the lockdown. Another noteworthy development in the second quarter was the resurgence in oil prices. So we actually saw oil prices increase 92% in the second quarter because of an increase in demand from both economies reopening, which led to increased demand, as well as production cuts from producers. This was the largest percentage gain in oil prices in a quarter in 30 years. On the macroeconomic data side, macroeconomic data has remained what I would say both troubling and unpredictable. The June jobs report showed the US economy adding 4.8 million jobs, but the unemployment rate remained high in the double digits at about 11%. And so that's still a pretty high unemployment rate. One of the questions that we hear most often is, how is it possible that markets can be up so much when we haven't seen the same level of improvement in the economy? And as we discussed in a recent client letter, as well as our most recent webinar, market movement tends to lead economic data. So those were some of the big picture themes from the second quarter. We'll now take a look at returns across major asset classes. So for the equity markets, what we saw was that US stocks had the strongest recovery and were up 22% for the quarter. If we slice and dice that data further, what you would see is that small cap stocks were up 25% and performed better than large cap stocks in the first quarter. From a style standpoint, value stocks underperformed growth stocks. On the international front, what we saw was international stocks were up 15% and emerging market stocks were up a little over 18%. So very strong performance across the board in equity markets. On the fixed income side, the bond market also posted positive performance during the risk-on environment that we experienced in the second quarter. The liquidity challenges that we faced, even in high-quality bonds during the first quarter, mostly abated because of the aggressive guidance and support that was provided by the Federal Reserve. Overall, we saw credit spreads, which is the difference in yield between a high-quality bond and a low-quality bond, narrow considerably in the second quarter. And the way that bond markets work, when yields go down, bond prices go up. And so what we saw was that lower quality segments of the bond market outperformed the higher quality segments. And so the US bond market, represented by investment grade bonds, was up 2.9%. Emerging market bonds, which tend to be riskier segments of the bond market, were up in the double digits, up 12.3% for the quarter. So now where do we go from here? Our advice, as always, is to focus on what you can control, maintain discipline, and also continue to have a diversified approach to your investments. The path forward to recovery is not clear or well-defined, especially because of the risk that COVID-19 continues to present in the form of recent outbreaks and hotspots, both here in the US as well as across the world, and then the chance of a broader second wave of the virus this fall. In addition to the timeline of the virus, what also is unclear is when an effective treatment or vaccine will become available. So the path forward for the economy is very likely linked with the path of the developments around the vaccine and the virus. And As a result of that, what we've seen is that market volatility has remained at elevated levels in the second quarter, and we can expect to continue to see larger daily market moves in the foreseeable future. As always, if you have any questions, feel free to reach out to us at wifleyfinancial.com.